Good evening, everyone. Time for another silver update. I want to first of all thank NetDania for the use of their charts. I'm going to put a link down below so you can access their site if you want to sign up for this service. It's netdania.com, and I appreciate them allowing me to use their charts. This is a gold chart on the 8-hour, and I've drawn a resistance and support line. You can see the line that we're just in the process of testing right now is a pretty important line because it was an initial test of this high run and then failure. Then it created a breakout point that you can see right there, and we broke out above it, tested down below it, came up above it, and then started to rally. Then we had the failure, and we came down and tested it. We tested it once, twice, 3 times, and then we crashed through on the 4th time. So this area that we're looking at right here is a very important level because this has been past resistance and support that's failed. So we're looking to get through this in fairly short order. The MACD on this 8-hour has turned up off of a somewhat overbought condition, and we're turning and going up. When we pull out to the daily, you can see that the daily has broken through fairly strongly through the 0 line and is still rising. So this is one of the most bullish times for this crossover. And then of course when we go back to the weekly, you can see that it's turning upward kind of at a point, a support point on the MACD. You can see right there it bounced off that. So the MACD seems to be establishing a higher trend range as far as being overbought, and it looks like it may be rolling to the upside. You can see the strength in the chart here. Now the MACD on the silver, of course, is much lower because you can see we went all the way down through the 0 line. I've been pointing this out for a while now. So the bottom is strong, but we're still just rising. We're below the 0 line. So we're expecting that if gold does turn around, that we will get a significant rally in silver. The $26 buy point and the $28 where I got in, I don't think we're going to see that again. I may be wrong, and I may have to revise my calls, but I don't think we're going to see that price again for quite some time, if ever. Now I wanted to first of all cover the interview that Eric King did recently with Andrew Maguire, and basically Maguire is saying, if you remember who Andrew Maguire was, he was the whistleblower from London who testified before the CFTC Commission that silver is manipulated, and he gave his predictions when he sent them a letter. He ultimately was called, and they had some testimony. I don't remember if Maguire himself testified or if it was the guy from GATA who did that. But anyway, he goes on here and he's defending the current commissioners of the CFTC, specifically Bart Chilton and Gary Gensler as well. And I think it's an interesting take. I know a lot of people have their doubts. Anyway, Maguire says, I hold Bart Chilton in very high regard, and anyone who casts any doubt on his integrity is mistaken. Without Bart Chilton and Gary Gensler, without their efforts, there would have been no progress. Chilton is simply voicing what myself and other people have presented to the CFTC. I am the original whistleblower, and I have stated that there is a hand of manipulation that's active in the silver market. There is absolutely no doubt about that. It's obvious that I've been trying to bring this to the regulators' attention for a long time, and I'm very pleased that Bart Chilton has been quite vocal in expressing his concerns. There's no question that there is manipulation that goes on in the silver market, and that it is ongoing. On a separate topic, Maguire had to say, regarding the MF Global situation, I recall a recent CFTC public meeting. Present at the meeting were CME's director and JP Morgan's Thompson, and they were vehemently opposing Gary Gensler's request for additional staff to implement the Dodd-Frank Act. Now, I recall Thompson, this is ludicrous. I recall Thompson saying something to the effect that, why do you need extra staffing when we, JP Morgan, already have 350 personnel working on the Dodd-Frank Act? Gensler put together the staff that he requested, and he was blocked by the likes of CME, JP Morgan, and these guys who were lobbying against getting any extra staff. I honestly believe that the MF Global disaster, along with all manner of other violations, would have been discovered in a much more timely manner if the CFTC would have had the extra staffing it requested. Now, it's obvious that a self-regulated organization like the CME has its own clients' interests at heart and not the interests of the public, so I'm absolutely incensed that any dispersions have been put upon Gensler for any failure to discover the MF Global problem when they, the CME, were actively blocking his requests for extra staff. The CFTC has been facing an incredible headwind from the CME and their members to stop any form of progress on the Dodd-Frank Act. This is yet another example of the power of the banking cartel and their constant abuse of power. So, interesting perspective from Andrew Maguire. He still says, as does Ted Butler, I believe, that Gensler and Chilton are the good guys, and they're trying to implement some type of regulations that will stop the ongoing manipulation in silver. So I have my doubts. I'm sure you do as well, but we'll have to wait and see what kind of progress they make. Now, I'm going to use that idea to segue into an article I wanted to cover, and this is an article that's on Zero Hedge, and it's by Charles Hugh Smith from Of Two Minds. He writes a lot of excellent articles, and I don't 100% agree with him, but he has done one here that is pretty much the way I feel about these things. The title is guest post, Financial Cancer. Our financial system is intrinsically fraudulent and unstable. I'm just going to read a little bit of this. Our financial system is like a fast mutating cancer that evades any control and is still perfecting its ability to game and loot. Two frequent contributors provided fresh insights into why the current global financial system will implode. It is intrinsically fraudulent and acts as a financial cancer, evading the immune system of regulation and perfecting its ability to exploit and loot the last remaining pockets of low-risk capital. We start with David P.'s excellent exploration of systemic fraud. Finance skims a percentage off the real economy. Some part of the skim is legitimate reward for capital allocation, a necessary part of a capitalist system and part of what makes it more efficient than a command economy. But some part of the skim is fraud. Where are we now? Let's look at the sources of the skim. First, there are the more legitimate skim sources: interest payments, management fees, IPO fees, M&A fees, trade commissions. Then there's the less legitimate bank sources: penalty, credit card interest rates, late fees, usage fees, over-the-limit fees, late payment fees, bounce check fees, low balance fees, and the capital markets sources: front-running, insider trading, account churning, manipulation of the news cycle, the captive analyst ratings game, trading against your own book, forex trades which are marked at the day, high or low, irrespective of when the trade took place, market manipulations at option expiration, stuffing your managed client accounts full of dubious IPOs and new issues that your organization is earning fees from originating. Bucket shops and Ponzi schemes take it even a step further. No actual financial activity takes place. It's simply robbery. And now we add the new stuff: credit default swaps without margin, fraudulent loan origination, sliced and diced mortgages, mark-to-myth accounting, foreclosure halts to avoid realizing losses, extend and pretend, quote stuffing, HFT trader activity that boils down to denial of service attacks on exchange computers causing delays in pricing information, highly complex derivatives sold to unsuspecting but optimistic public servants, too big to fail status providing cheap backup in the event of trouble, and increased organizational size that facilitate cartel-like control over government and regulators. But if that's not enough, there's the structure itself. They aren't doing this with saved capital, but rather with freshly printed and or borrowed capital. It's all done with 12-to-1 leverage and a minimum, so only 8.3% of the gambling, optimistically anyway, is actual capital, saved surplus. And if Basel II says it's risk-free, well, there's no need for reserves at all. It's just manufactured money, which effectively means each bet is diluting the actual savings of real people. And if the bet goes bad, the Fed will ride to the rescue with low-cost money. But usually the bet goes well, because ordinarily the number of sources of fraud today is so huge it's practically impossible not to succeed. And that is absolutely true. I agree with everything he said there. I'm not going to say these things are fraud. A lot of them are fraud, but there are so many instances of the fox guarding the chicken coop that it's become absurd. And some people have proposed, like as I just referred to, the Dodd-Frank Act. There are other acts, and you can see with Dodd-Frank that, and we had other regulations in the past, specifically Sarbanes-Oxley. Every time we have a scandal, we have the government come and make new regulatory law. But the problem, of course, is not that we don't have the proper laws on the books. They're not even obeying the laws that we have on the books. So just as in the case of the CFTC trying to begin to implement the Dodd-Frank Act and not being able to do so, what good does it really do you to have new laws and new regulations if the ones you already have aren't being followed? So I actually think the case is worse than he's describing here. But I wanted to show you and go back to an issue that I've covered in the past, but I really wanted to dig in and show you the real meat of this. And if you remember, I had used the Proshares Ultra Silver, specifically the AGQ. If you remember, well, actually we just need to go to the AGQ here, and that's a cross that I've got. But if you remember on the AGQ, after the call was made for the drop in silver, I believe it was when Clive's article came out, and I had purchased the, I'm trying to remember because these things change so quickly, but I believe I had purchased the 120 AGQ put. Now, what's interesting about this, and you can see this if you go to historical prices, especially if you go to historical prices and choose the monthly, and you can see that we actually had a 2-for-1 stock split. So back before then, that was, we were around, here's the period 181 to 224. So we actually got cut in half down to about 100, and we were cut in half again, but that was due to the stock split. So you see these, that's one of the things you see on these is splits, and even more often than that you see reverse splits, especially on these ETFs. So if we go back to the opposite ETF, and this is actually the one that I was looking at investing in before I bought the AGQ put, and afterwards as well when I was looking at AGQ calls and other things. But this is the ZSL, and this is the opposite of the AGQ, and this was one that I was looking to short. At the time I wanted to short it was roughly in here after the rally, and I'm sorry, after the breakdown in the silver price, and I was looking to go long, and the first thing I looked at, of course, was shorting the ZSL. The reason why, I'm going to show you that in a second, is that the only way you can play these ETFs is by shorting them, because they have this built-in decay, which is just, and that's about the topic that I wanted to talk about, which was addressed by Charles Hugh Smith, is this inherent fraud that's built into these things. So at that time I actually went to my broker and I tried to short the ZSL, and I couldn't borrow the shares. So I ended up buying a call instead on the AGQ, which on that one I ended up breaking even or losing a little bit. But you can see that if the price I tried to get filled at, I think, was 19.57. So you can see here with the ZSL currently trading at 11, if I would have been filled on that, it would have been an excellent short. Now, if we look over at the historical prices on the ZSL, and we'll do the monthly as well, you can really see it on the ZSL. We have had the price of the ZSL fall all the way down to 3. Then they had a 1-for-10 stock split, put it back up to 30. It fell all the way to 7. They had a 1 to 4 stock split, and now it's falling all the way again. Now, how is it that these can fall like this? So that's what I wanted to show you on the comparison that I had, which was the overlay of the ZSL and the AGQ. And the time frame that I chose was one that showed the particular decay of that. So let's just go ahead and put that comparison in again. It's the ZSL overlaid over the AGQ. And you can see here that coming from, we're on the 6 month, let's go year to date. Year to date, we've got the AGQ down about maybe 10%, and the ZSL is down 60 or 70%. So you can see the decay that is built into these. Now, another one that I've pulled up is the FAS, the FAZ, and that's the financial ones. These are triple financials, so you're betting on either the financials going up or going down. And these are really extreme. If you go to the max, you can see actually the blue is the FAZ. So if we just look at the FAZ alone and go all the way out, you can see the impact of these reverse splits. Now, this is a 3 times financial bear. You would think, well, the financials got in trouble, didn't they? Well, this came out 2009, but you can see the rally in the market basically destroyed this. This price has gone from 5,000 something down to 39.9. So you can see from these charts that there's a definite problem with these ETFs and how they work. So I wanted to show you real simply how that works, and I think you're going to be shocked at how ridiculously simple it is the way these things work and defraud people. So I'm going to bring up the dreaded calculator, and we're going to do a quick analysis of these. So we're going to start off, and let's just say our underlying, whatever it is, it's a stock, it's a commodity, it doesn't really matter what it is. Let's say we're going to go with a 20% fluctuation per day. Now that's pretty extreme, but with silver we've actually seen it in the double and triples even more than that. So we'll just use that as our base. So we'll take 100, and to get a 20% gain we will multiply by 1.2, and then we get our total. Now we're going to have a 20% loss, so we should be even, right? So we'll multiply times 0.8. But we're not even, we're down 4. Again, so we will multiply times 1.2 and then times 0.8 times 1.2 times 0.8. So you can see the decay here. It's going up 20%, it's going down 20%, and yet over the long haul it's decaying to 0. Now this is actually just a function of simple math. So you can see just after the amount of time that we did up 20%, down 20%, maybe 10 or so times, we're actually down 20% in price, even though we should be even, because the price of the underlying may be the same as it was when it began, but since they're calculated on a daily basis, up 20%, then down 20%, etc. So you can see that we're down 20% from the initial starting price. Now, that is my belief on how these prices actually work, why we get the decay in these ETFs that we do. And if that's the case, which I do believe it is, then you really have to be amazed that it really is a financial cancer that is infected into our system. They're literally looting out the last remaining pockets of capital. With some of these instruments are so on their face fraudulent, like the one I just showed you, with its simple mathematical trick to steal the money from the people who are investing their money in paper assets. So I agree with Charles Hugh Smith that the financial system, the paper financial system, is completely fraudulent and corrupt, and you are just about guaranteed of losing everything if you put your money in that. So you have to put your money in physical silver and physical gold, because the current financial system that we have is completely corrupt. Will there be a financial system in the future that is honest and is based on real money? Possibly, I don't know. But I can tell you that the current financial system that we have is utterly corrupt, and if you put your money there, you're guaranteed to lose. And we'll talk to you next time.